What is going on, guys? We're back again with another video, and in today's video I'm going to be going over framing A plus trade setups, and this is going to be me giving you a full top-down analysis utilizing the higher time frame, the intermediate term time frame, and the short-term perspective all the way down to my executions. And it is on the Forever model, a trade breakdown that I took on the NASDAQ, which was last week on Friday. So let's get right into it so you guys can understand my whole mindset going through execution and analysis. All right, starting off, we have NASDAQ, the S&P 500, and the Dow Jones on the right. This is weekly charts. Now, I always start off with blank because I want you guys to pause the video and see if you could annotate the chart and if your annotations can match mine. So pause the video now before I show my annotations on the next slide. So if you had that marked off correctly, you can see here that we have SMT divergence inside of this weekly internal range liquidity pool, while S&P 500 and the Dow Jones ran the external range highs. But you could also see here on the NASDAQ, we ran a short-term high here into a weekly internal range liquidity pool while creating SMT divergence at the highs. So we had two factors leaning me towards lower prices and weakness out of the NASDAQ compared to S&P 500 and the Dow Jones that have already taken out all-time highs. So if I'm looking for lower prices, giving my higher time frame analysis, I'm going to prioritize shorts on the NASDAQ compared to these two. So since we're on the weekly, our next aligned time frame that we would look at is the 4-hour. So we're going to look at the reaction off of that weekly key level on our 4-hour chart. So here is the 4-hour on the NASDAQ on the left, and then we have the 4-hour on the Dow Jones on the right. So you can see here, this is our SMT divergence between ES and the Dow, and then we have a short-term high that I marked off, like I said before on the weekly, inside of that weekly internal range liquidity pool. Now, I want you guys to annotate price inside of this area. Compare the NASDAQ to the Dow Jones and see what is happening here compared between the two. So pause the video, annotate your charts before I show my annotations on the next slide. So if you had it marked off correctly, you could see here that we're trading inside of a 4-hour internal range liquidity pool. But also inside of that 4-hour internal range liquidity pool, what are we creating? SMT divergence. Because in the Forever model, our trade A plus setup consists of a two-step foundation that is then able to lead you to an execution. Step 1 is price reaching an internal range liquidity pool, and step 2 is waiting for price to create SMT divergence in that internal range liquidity pool. And you can see here, we have step 1 and 2 marked up on our checklist. So we also have a run of a short-term high inside of that. So there's a liquidity sweep, an internal range liquidity pool tag, and SMT. And I'm using as a draw on liquidity correlated lows between the two assets that do not have SMT divergence. So I'm looking at this resting low as a potential for a draw on liquidity. So now that we have a 4-hour internal range liquidity pool with SMT divergence, I can drop even lower to my execution time frame, which would be the 15-minute chart from this 4-hour key level reaction if we're looking for an intraday move. So let's go and look at the 15-minute inside of that 4-hour key level. So moving on to Friday's day post 8:30 high impact news. So this is when we created that SMT with the Dow Jones on that 4-hour chart. And you could see here, this is that 4-hour short-term high that we ran inside of that 4-hour internal range liquidity pool. And this was our 8:30 high impact news. And what did our 8:30 high impact news do? It ran the short-term high, manipulating, creating a Judas swing in a key level that also created SMT divergence. So in my mind, I'm thinking that the move up into this key level at the news release was a fake move, a Judas swing, or manipulation before we go lower. But that is just anticipation. I need confirmation for me to confirm this. And our confirmation would be waiting for a change in state of delivery off of that 4-hour internal range liquidity pool. So how do we identify a change in state of delivery? We wait for the candle closure below the candle that ran liquidity, which is this candle right here. We need price to close below the opening of this candle in order for us to identify an order block or a change in state of delivery for us to even look for an execution. So we're going to wait until 9:30. That comes in here. Equities open. Boom. 8:30 manipulates. 9:30 distributes, confirming a change in state of delivery / order block off of that 4-hour internal range liquidity pool that created SMT divergence. So our time frame alignment is there from our weekly chart to our 4-hour to now our M15. And all we need to do here is simply enter off of the tag of that 15-minute bearish order block / change in state of delivery candle that got created at equities open. So what we're doing is we're setting a limit at the tag of that opening price with a stop loss at the candle high that ran liquidity and created our 4-hour SMT divergence. And all we do is look for a 1 to 2 risk to reward. And you can see next thing that happens, the next candle at 9:45 tags us in, and then the following candle at 10 o'clock delivers us to a 1 to 2 risk to reward. This is a 30-minute trade. In 2 candles, you are reaching a 1 to 2 risk to reward. And this is what I called out in my Discord, and I traded live. But I want you guys to look a little deeper because this was a 2-for-1 trade breakdown. 2 things happened here. We had a weekly 4-hour to M15 analysis, but we also had this here. There was a 15-minute, since we're on this 15-minute chart here, to M1 entry that you could have also stacked based off of this. Because what did we create here? SMT divergence. But what is also right here? A fair value gap. So let's dig a little deeper and analyze this a little bit more. What did we do right here? Price came up, tagged an internal range liquidity pool on the NASDAQ. What did we do on the S&P 500? We ran the high. While NASDAQ created SMT divergence inside of that 15-minute internal range liquidity pool. Step 1 and 2 are marked off on our checklist. So all we need to do now is drop to the M1 chart and watch the reaction on the NASDAQ to see if there was a forever model entry. So let's do that now. Here's the reaction. M price trading into that 15-minute fair value gap. So what did we do from the 4-hour to the M15? What are we looking for? We're looking for a sweep of liquidity. We're looking for a tag of an internal range liquidity pool and SMT divergence. We have all 3 of those there. Look, we have a run of a short-term high. We have a tag of an internal range liquidity pool. We have SMT divergence inside of that internal range liquidity pool. Now we have our change in state of delivery / order block candle. This candle here that ran the short-term high. Then this candle here closes below it. All we're doing now is executing. When price comes up, tags that candle, stop loss goes at the candle high that ran the short-term high, and then you're looking to target a 1 to 2. Boom. Price comes up, sensitive area, delivers us to a 1 to 2 risk to reward with slim to no drawdown. You can see what I just did here for you guys. I just gave you the framework behind an A+ trade setup for 2 trades that were given and delivered between an entire listed time frame alignment. We went through our higher time frame analysis. We went through intermediate term analysis and short-term perspective analysis. And everything together was able to combine and tie in for our overall bias for the day, which was a low sell-side delivery pool drawn liquidity. And when all your time frames are linked together, that is when you're able to frame the highest probability trades and a high probability bias that gives you the confidence to execute on days like this. Now, I hope you guys enjoyed and learned something from these 2 trade breakdowns. I'll make sure that I do more of these in the future. But if you guys are interested, I'll leave the link to my Discord where I trade live in the description of this video. But I hope you guys enjoyed. Like always, be safe, good luck, good trading, and I will catch you guys next week in the next upload.